Tax groups, consolidating corporate tax liabilities for companies under common ownership. Overview of tax grouping. A tax group refers to a grouping arrangement that allows companies under common ownership to consolidate their tax obligations and be treated as a single taxable person for the purpose of corporate tax. This treatment is designed to streamline tax administration and reduce the compliance burden that individual companies within a group would otherwise face. By forming a tax group, businesses can simplify their tax filings, consolidate their accounts, and eliminate intragroup transactions for tax purposes, making the overall tax process more efficient. The concept of a tax group is a useful tool for businesses with multiple entities under common ownership, as it offers several benefits. Most notably, it allows for the grouping of taxable income and losses, which can lead to more effective utilization of tax losses and provide greater flexibility in managing tax liabilities across different entities. This treatment can be applied to corporate groups and is not limited to just privately owned companies. Government entities that conduct business activities may also qualify to apply for tax group treatment under certain conditions. Conditions for forming a tax group. In order for companies under common ownership to form a tax group, certain criteria and conditions must be met. These conditions ensure that the companies within the group are sufficiently related to one another to justify treating them as a single taxable person. While the specific details and requirements can vary based on jurisdictional rules and interpretations, the general conditions typically include 1. Common ownership. The companies seeking to form a tax group must be under common ownership. This means that the entities involved must be controlled by the same parent company or individual stakeholders. The level of ownership necessary to form a tax group can vary, but typically it requires the parent company to own a significant percentage of the shares in the subsidiary companies, often 75% or more. 2. Eligibility of group members. The companies involved in the tax group must meet the eligibility criteria established by the tax authority. These criteria often involve the business nature of the companies, with certain exceptions for specific types of companies that may not qualify for tax grouping treatment. 3. Single taxable person status. Once the tax group is formed, the group is treated as a single taxable person. This means that all tax liabilities, including taxable income and deductions from activities of the companies within the group, will be consolidated and reported under one entity. This consolidation can result in simplified tax filings and reporting. 4. Tax losses utilization. One of the most significant advantages of forming a tax group is the ability to utilize tax losses across the group. If one company within the group has incurred tax losses in a given tax period, these losses can potentially be offset against the taxable income of other group members. This enhances the flexibility of the group and enables more efficient tax planning. Benefits of tax grouping. Forming a tax group provides several strategic benefits for companies under common ownership. Reduced compliance burden. By consolidating tax filings and reporting, the group reduces the administrative work and the need for individual companies to file separate tax returns. This leads to lower compliance costs and less paperwork for each individual company. Simplification of accounting. The tax group treatment allows companies to simplify their accounting processes by eliminating intragroup transactions for tax purposes. This means that transactions between companies within the group are not subject to corporate tax, avoiding the complexity of intercompany tax adjustments. Flexibility in managing tax losses. When companies under common ownership form a tax group, any tax losses incurred by one company can potentially be used to offset the profits of another within the same group. This provides increased flexibility in managing the group's overall tax liabilities, enabling more effective tax planning and optimization. Efficient utilization of tax benefits. As a single taxable person, the group can more efficiently utilize various tax benefits available under the tax law, including tax credits, deductions, and exemptions, by consolidating the group's income and expenses. Increased financial flexibility. With the elimination of intragroup transactions and consolidated tax filing, the group may benefit from improved financial forecasting and planning. Tax grouping allows the group to better manage cash flows and capital allocation across the various companies within the group. Eligibility of government entities. Interestingly, businesses and activities conducted by government entities can also apply for tax group treatment, provided they meet the required conditions. This inclusion is significant because it extends the benefits of tax grouping to government-related operations that conduct business activities similar to private sector companies. For example, government-owned enterprises or state-run entities involved in commercial business activities can use the tax group framework to consolidate their tax positions with other government-owned businesses. This streamlines their tax compliance and increases the efficiency of managing their financial affairs. Ministerial decisions and further guidance. For more detailed guidance on the specific conditions, procedures, and requirements for forming a tax group, it is important to refer to the relevant ministerial decisions issued by the government. One such important decision is Ministerial Decision No. 125 of 2023 on tax groups. This decision provides the necessary rules, definitions, and processes that businesses need to follow when applying for and managing a tax group under UAE law. Companies and government entities looking to take advantage of tax group treatment should consult this ministerial decision and any related regulations to ensure they are in compliance with the applicable rules and that they are properly benefiting from this tax structure. For more details, contact us.